We look at ourselves as a platform to foster sustainability as a way of life.
It's also about fostering social innovation, fostering social entrepreneurship. In the long run, what really matters is this informal kind of mentorship.
So the way to identify social needs is actually to spend a lot of time in the field.
One of the ways in which social innovation is driven is informally.
Every activity has to be socially relevant.
Baird, Village Capital. Village Capital started 4 years ago. Yeah, so entrepreneurship is all about solving problems, and social innovation is identifying clear social problems. In our definition, problems faced by people living in poverty or problems related to renewable energy and environmental sustainability. Come up with a very clear business solution to those problems that people are willing to pay for, and building an organization around that innovation so that innovation can reach very significant scale, paid for by revenue of the people whose problems that you're solving. So, really good social innovation is as simple as identifying social problems and coming up with solutions that are so good people are willing to pay for them. Most of our entrepreneurs have a thing or a product or an idea that's working at small scale. We help them. So, for example, a company that has a basic health checkup for 50 rupees for low-income people that takes 5 minutes. They might have one booth in one slum and have 100 people a day paying 50 rupees, and this health checkup software that they've invented is working well, but they are looking to grow to a business where it could be in every slum in India and every village in India. So we help them develop business plans and business models that takes this from pilot to scale. We help them identify and segment who their customers are so they can figure out how to grow. We have a pipeline and network of investors, and we help them find the investment capital that would be the fuel to drive that growth. And then we ourselves invest in companies directly. We invest in companies that are picked by their peers in our program. We believe that entrepreneurs are the best judge of other great entrepreneurs. I think there's a lot of friction. I mean, I think that if you're starting a company, no one person can get you what you need. You need a lot of different points of advice to figure out what the right product is. You need to meet a lot of investors before you find you need to meet 1,000 investors before you find the right 3 for your specific company. If you're making hires, you need to interview a lot of people to find the right bid. And entrepreneurs have so little time and typically very small networks that there's a lot of friction when they try and make those high volume of contacts. So we seek to be a platform or a node that enables very high volume of contacts with customers, potential hires, investors that makes that a lot less confusing and a lot more structured, makes those kinds of network building activities that entrepreneurs are absolutely critical for entrepreneurs much easier. I think it comes down to revenue. I think we've been at this for 4 years, and I think the most successful companies are the ones who have a product that's solving a very clear problem and have a real good fit with who their customer is. And the companies that a lot of focus is placed on investment, and investment is important. We're investors. But really, the most successful companies have grown through revenue much more than growing through investment, because when you really have something that people are willing to pay for at scale, it's very difficult to stop that company. Peer selection. So we don't sit here and say, we know everything, you know nothing, therefore we will decide which of you will be successful and we'll tell you all how to run a good company. We say we don't want to be a sage on the stage, we want to be a guide on the side. We come in, our team, we are all entrepreneurs ourselves. We really view ourselves as a guide alongside our entrepreneurs, and we believe in the entrepreneurs so much that they are our investment committee for our fund. The entrepreneurs themselves decide who we invest in, and that's, I think, the biggest differentiator. I would say two things. I would say number one, among people working with early stage companies and among early stage entrepreneurs, a laser focus on who your customer is and what value you provide. I think when we see this failing, we see people saying, oh, I'm making this impact over here and I have this revenue over here and I'm raising this money over here, and they're not aligned, and it's too confusing to build a successful company. When people say, I am selling you basic health services, you are paying me for that, that's a feedback loop that is helpful to the impact of what we're trying to do, but at scale, that revenue could grow the business is really, really critical. So focus on customer. And I'd say the second is risk tolerance among investors. I think that we are finding that people don't get involved at these early stages because they're too afraid. And I think that there are thousands of companies that are worth a shot here, and if investors were a bit more risk tolerant, I think they would find a reward at the earlier stage.